Afternoon. Let's begin by noticing, of course, the little movement on the main index there, just 0.1% up on the day. Any particular reason why investors seem to have deserted the market?
First of all, a little bit of background. You know, the index prior to the bear run was largely around 4,500. Today is 3,100, attempting to break a 3,200 barrier. Of good note, of course, is the rally of Safaricom, up now above 5 shillings. Hopefully, this will be a support for that stock. And Safaricom has a very big weighting on the Nairobi Stock Exchange share index. This stock was particularly helped to accelerate the bear run in the Nairobi Stock Exchange. Its rise up again could perhaps be signaling a different view from investors.
But the interesting thing for me, Fred, is that you have your heavyweight up on the day, 3.1%, heavy weighting on the overall index, but the market still edging up just 2.92 points, which means there were heavier losses elsewhere on the market. And I noticed Capacid down 9.4%, Express 8%, Crown Berger 4.1%, Kenya Re, Standard Bank Group, all those shares under pressure. Any reason why the broader market is under pressure?
First of all, another thing that happened recently is the new computation for the inflation rate, and it brought down the inflation rate from about 26%, from about 20% to 6.6%. This has an effect of lowering required rate of return from investors, meaning investors will be happy to take stocks at a lower price. Now, coming to a stock like Capacid, Capacid just came back. It was relisted just barely a month ago, and most investors had been locked in for more than about 4 years, and they were very eager to take their profits. This was a company that had a lot of good things running for it. It had a cash-rich balance sheet. Many investors took their profits, and we are seeing it normalizing, coming back to stable prices.
I'm also reading in the numbers that I'm seeing before me, Fred. Volumes are down 23% today, and turnover is down 21%. So I am reading in it that institutional investors seem to be absent from this market, and what you have are moves that have been influenced more by perhaps demand for a particular script than broader demand from the big investors.
Yeah, you know, big investors tend to come in blocks, and sometimes they take a breather, and I believe this is one of those breathers. We're still going to see a lot of interest, especially in Kenya Airways. This has had a lot of interest from foreign investors. It has had a very, very positive rally in the past 1.5 weeks. Safaricom is another stock. Cooperative Bank is another stock. So this is, in my view, it is a short breather. We should see activity going up again.
Kenya Airways up, that's 8.2% today, and it gained again by near double-digit margin yesterday. What's moving that stock? As
I said, we have a lot of foreign investor activity on that stock.
But why are they buying it?
Yeah, but first of all, in the previous year, they announced huge losses, which were occasioned by hedging activity. But they were able to write off the entire hedging losses, and this time their balance sheet is clean, and hence any appreciation of the price of fuel is definitely going to impact positively for them. And perhaps people are taking a view that the oil prices are heading north, and hence it will be a positive thing for KQ.
We carried a story yesterday on CNBC Africa about an interview that we had with the CEO, Titus Naikunu, and he was talking about them being interested in buying Ethiopian Airlines. Is that feasible, do you think? And is there any merit in them going for Ethiopian Airlines?
Well, we know Ethiopian Airlines is one of the largest airlines in Africa. The feasibility of it is not easy to say right now. We have to remember a company like East Africa Breweries also had interest in going to Ethiopia, and its efforts were significantly hampered, and it faltered along the way. We have to discount that a little bit, but we wait to see. hopefully it will materialize on this company.
We wait to see. Indeed. Let's take a quick look at CFC Stanbic Bank. They posted results today, a 6% drop in pre-tax profit for the 9 months to the end of September. But net interest income up 32% to 4.62 billion rand. That's my takeaway from there. What was your takeaway?
First of all, let's have a little bit of background information on the banking industry. Just recently, this week, central bank cut the central bank rate by 75 basis points. It is signaling, it is passing a message that they would want to see more and cheaper credit to the private sector. That's one. Secondly, inflation rate came down all the way to 6.6%. Hence, there is a lot of pressure for banking sector to lend to the private sector. Now, come back to CFC. CFC is one of the top 5 banks in the country. And most of the top 5 also reported marginal increase, and some of them losses, a decline in profits in the past 1 year. This is probably because of decline in GDP and economic activity. That's where, and then also hesitation from banks to lend to private sector. However, in the coming months, perhaps in the coming 6 months, perhaps we expect to see a different direction given what central bank action have taken place.